Let's say you set up a solo K and you have other retirement accounts. You can roll those funds into the solo K, a traditional IRA that's been sitting out there somewhere else, an old employer 401k. I can roll that in. If these are traditional dollars I get into the solo K, I can convert them over to Roth, but I pay the tax on the amount I'm converting over.
Let's say you're under age 50. You put in $19,500 in your solo 401k as a Roth contribution. Well, on top of that, you could do an after-tax contribution to the traditional portion of the 401k. It's a very unique strategy. You want to understand it, get a consultation with the lawyers or your accountant before you do it. It's in your solo 401k binder, but you could make that contribution and then turn around and convert it to Roth, and there's no tax. That allows us to start opening the door to what we call the mega backdoor Roth.
So the only thing I would add is that takes some gymnastics. So when Mark says talk to your attorney accountant, you're going to have to engage your accountant. This is all going to happen on your tax return. What happens is when you do the after-tax contribution, let's say you're an S Corp, that's got to be on your W-2. That's got to get recorded on your W-2 as an employee after-tax contribution. And then when you convert it, there's got to be a 1099. Now, we know there's no tax on it, but this all stuff has to happen in order for this to work. So now I got a 1099-R, and if you're doing it at directed, we have a form for this, that we have a custodial account here where we're holding your money. Pick this up and throw it in your solo K account here as an after-tax contribution, which you're immediately electing to convert to Roth. So now it's just regular Roth 401k dollars, just like the rest of your Roth 401k that you have. But we're going to send you a 1099. Now, I've had clients be like, why do you send me a 1099? Because I have to. You have to pick it up on your 1040 and say that the taxable amount from the 1099-R is zero because it was an after-tax contribution. I didn't take a deduction on. And they're going to look and make sure it was on your W-2. And so this stuff all has to loop. So just know there's some mechanics to it. A lot of solo K clients are kind of do-it-yourselfers, and they do their own taxes. And we're not doing this piece for you. This is a little sophisticated. If you're going this route and you haven't used an accountant before, it's probably time you start having an accountant do your tax return. So make sure this is getting done right.